Hello, this is Pat Walker at MissionWinners.com. I'm doing a video here, a coaching video for everybody. I have taught on the university level years ago for several years, and I love teaching. To me, it's not just about giving stock ideas, which I love to do, but it's also explaining things so then you own the concept. You know it. I always tell people this: to know that 2 plus 2 equal 4 is knowledge. But to know why 2 plus 2 equal 4 is knowledge that you then understand the concept and can transfer that knowledge to other situations. One of our foundations is being careful chasing gap ups. And I'd like to show you something. We're looking at Walmart. This is yesterday's bar. Opened here, and closed up on heavy volume. That's good to see. Today, I'm going to advance at one bar. This is what you're looking at yesterday. Today, the stock gaps up, and look at where it opens. See that little slash mark right there? That's where it opened. There were people that bought it there. You can say, well, how do you know that? Because it opened up there. It wasn't a bunch of selling. It was buyers driving it up to cause it to open there, right? Supply, demand was greater than supply, hence the gap up. Now, we have a couple of rules that we teach that help people. One of them is the 10-minute or 30-minute gap up rule. What do? Wait 10 minutes to 30 minutes before buying. So let's dissect this further. The stock gaps up. We're going to take it down to 30-minute first. Here's the open. This is the open. And then it runs up and proceeds to drop. If you had waited 30 minutes, you could have saved all this pain right here. This hurts. If you bought it up here or up here, you're frustrated. I'll keep it clean. You're frustrated. Now let's take it down to 10-minute. Here's the 10-minute. It gaps up, it runs up, and it closes in the bottom half of its range. You could have a rule that's very simple. If you bought this gap up, you would say, until it takes out the lows, if it does, I have to sell, which would have caused you to lose a lot less money. But if you also flipped that rule and said, I will wait 10 minutes to 30 minutes before I buy, guess what? You didn't buy it. And there's something very profound in this first bar. Note the open, note the high, note the low, note the close. This bar was not met with buying. It was near the close on this bar. It was met with selling pressure. They sold into it. If you had the rule and waited, you would have avoided this. And folks, I will tell you, you buy the stock up there at 125 and it's trading at 120, you can say, that's only 5 points. Percentage-wise, it's not much. Okay, I can live with that, but it's still 5 points. And you could have avoided it and said, you know what? I can wait and find a clean entry. So then you go back to the daily. Does this look like a good chart to maybe buy the next day or two? No. So we wait. You protected your financial capital, but more importantly, you protected your emotional capital. You have a clear head. It allows you to analyze the situation clearly without any baggage or losses. It's something we teach just to help people. And I hope this helps you.